Back with Vining Sparks Bank and Equity Strategies Director Marty Mosby. Marty, bank stocks, do you want to put new money to work in this group now? How do you think the stocks fare going forward?
Well, we do think that this, like we talked about, paranoia or fear of recession has brought the valuations in to create a very good entry point. Again, if we can get that cash return of 10%, which is, really already set as you look at dividends and share repurchase that have been approved, that gives you a real nice base to look at. The other thing that we talked about was that yield curve steepening. If you look at the actual market rates today in comparison to the portfolio yields on these banks' balance sheets, you have what is the widest spread that I've ever seen, about 100 basis points of innate earnings that these banks get to recapture over the next couple of years. So even without rates going up from here, you still have a kind of embedded positive that they'll get going forward. Are you expecting a good report from B of A? We think they'll be pretty much in line, maybe a penny or two better, just depending on what happened with net interest margin and maybe a little bit lower credit costs. But I think 62, 63, 64 will be the right range to kind of see there.
And do you think earnings are going to have an impact on the markets, given the fact that we are watching a nervous market with interest rates creeping higher? Will earnings move the sentiment?
What we've seen in every earnings season, except one in the last 3 years, is the fact that the banks outperformed during this month, because they're kind of going back and validating that they're continuing to improve profitability. Return on tangible common equity for these large cap banks is up 400 basis points in the last 3 years since interest rates started to move higher. We think we got another 100 to 150 ahead of us.
But do you think that if earnings are as good as people are predicting for this week, that that's going to turn the tides right now that we're seeing in this sell-off?
It'll take a little time as we go through earnings. This has kind of been the last playbook every earnings season. You start off a little weaker. You get some of those folks that wanted to sell, kind of purging as you have a little buying, and then all of a sudden the earnings kept coming in a little bit more favorable, especially as super regional banks begin to kick in about midweek, and then all of a sudden the stocks start to trade up for the rest of the month.
Some of these technology stocks, though, are still sporting really outsized gains just for this year. I wanted to point this out earlier. Netflix still up 77% year to date. Amazon up 53%. Apple still up 31%. So they're still looking a little bit pricey.
Even as earnings seem to be coming in better than expected. We got the Bank of America numbers, Marty. It's 66 cents a share. Estimate was 62 cents a share. Revenue $22.8 billion versus an estimate of $22.7 billion. I realize this is just headlines for you, but knee-jerk reaction here. What do you think about these numbers as we dig deeper and take a look at the lines of business and where the growth was?
Well, we're rounding up to the upper end of the range, which is positive. I would imagine there's probably a little bit of favorable there with release of loan loss allowance, which the market really doesn't give these banks credit for. So we're probably looking at, somewhere in that 64 range once we begin to clean that up and look at some of the other pieces of the release here.
All right, no movement on the stock. Stock is at 28.30, down 1/3%, off of the lows this morning. Marty, good to see you. Thanks so much.
Thanks for having me.
Marty Mosby joining us there.